All attendees are in listen-only mode.
Okay. It's a test. Make sure that you guys can hear me as well as see the screen, of course. Hello, all good, I'm told. Brian says good. All right, so it seems as though we are working. Yep, happy Wednesday, Eileen. Happy Wednesday, everyone. Good afternoon, Pooja. So let's begin. As mentioned, I wanted to talk. I have a few topics that I want to cover for this week. One, obviously, is the dollar yen. We've been short since, basically the top up here on NFP, and we're taken out at 117 today. Currently trading 117.10 after the early spike down into 116.06. The rallies actually started to pick up here in just the last couple hours, almost 100 points off the low here. So want to be long dollar yen on a really short-term basis. I actually bought some at about 116.30 this morning, and I got out of that after 50 points on the upside at 116.80, and this thing is still kind of ticking higher. As you can see, we came right into the median line. Okay, this was outlined last night. Dollar yen had talked about, if a triangle is underway, this is what was written in the swing update. If a triangle is underway, rate likely test at least 116.94. That was the 61.8 extension of the December decline. That would be this move here. So you take the December decline, you extend it from the top. You can see that's 116.94. Obviously, we went below that. Said it's worth noting that the median line is at 116.45 on Wednesday, just pips from daily reversal support at 116.39, and of course 116.39, which is daily reversal support, is right here. Okay. Wait, hold on one second. I want to make sure that I have the mouse working, because I understand that I did not in previous webinars. Let's see, hold on. File options. Preferences. Let's see. When I move the mouse around, can you guys see it or no? Brian says, yes, the mouse is visible. Oh, okay. All right, never mind then. I was told that it was not. Good. All right, so the idea that a triangle is underway, right? The big support for that, a fairly wide range, but we're dealing in a fairly volatile market here. So, it's basically 116.40 to 116.94, call it 117, whatever. And the market obviously spiked 116.06. I think the next move, again, being if this is a triangle, which things have been lining up to suggest that for a while. The moves down here, this is certainly a corrective move on the downside. This move here, at this point would, be a three-wave move. This move here, a little tricky, but might be a truncated C wave up here. kind of semantics at this point, in a range, and so the next move I think is higher. So it's interesting to note alternating legs of a triangle, right? The 61.8. If we say that today's low is wave C, which it very well might be, given the response we've had off of this level, right? The 61.8 of the alternating leg of January, okay, the rally here in the end of December, I should say, actually not January, but the end of December, should put us at about 119.30, okay? And that happens to be the high from Monday. So you've got a daily high up there as well as a fib relationship, which is always nice. And that would be where we're looking. As far as how quickly it could get there, if we see a V-type of bottom that we saw in January of 2014, let's see what the last 2 hours here are for, let's see, 119.76, 117.03. So I still have this spreadsheet of the 119.76 and 117.027. So this is the analog, right, from the January 2014 level. Oops, I put up the wrong level. There we go. So this is what we're still dealing with this. Blue, January 2014, red, January now. So, if we have the type of move that we had last January, we could be back up at 119. Sounds kind of nuts, but we could be back up there by the end of the week. All right. So the focus now, I think, turns to, at least for me, turns to putting on the swing position, to try to catch this move on the top side. Sometimes the best way to do that, talked about last week a little bit, but the best way to do that might be to put on an order down near the hourly reversal level, which is 116.31, and you still have the daily reversal at 116.39. Okay, and then if we look at some of the shorter term averages here, what's going on here? What's this? No, sorry, wrong chart. Look at some of the shorter term averages. The 24-hour average we were just coming up on right here at 117.20. I mentioned earlier that 11700, 117.20 is probably resistance. Okay, so if we come down from there, we got 116, basically still 116.30 to I think 116. I'd say 116.50 at this point as possible support to come into a low. If we just had made a small peak there, those line up pretty well too with the zone, the fibs. So also we'll see where the pivots are and all that. But in general, risk at this point, I think, may have kind of flipped slightly to the upside for the dollar yen over the next day to 2 days, and then we'll take it from there. Kind of trade the next day at each point here. Let's talk about the trade and how we manage this trade, right? You notice that throughout the course of the trade here in dollar yen, which was from the NFP spike up here, I never really advocated taking anything off, taking part of a position or whatever. It's like taking some off at 117.50 or 118 or whatever. Although that's not a bad, it's never a bad strategy. But in this case, we just had so much information on our side. Okay, we had the respecting of the daily reversal resistance up here at 120.70, right? We also had the similarities, which I first touched on last Wednesday, to the 2014 trade in dollar yen, right? And the market just kept following it. So I mean, for a while it was hour for hour. So when you have that much on your side, you might as well kind of let it go. And it would have been even better, obviously, trying to add on any rallies. Just didn't have anything extremely high probability, in my opinion, on the as far as re-entry was concerned. Okay. So the first 1700, 1720, after that, I'm probably going to see some resistance at this median line. Okay, and call it 1750 or so. So be patient as far as getting on the long side on dollar yen. If it doesn't happen over the next day, we might get an opportunity to add, say, on a dip into a 24-hour moving average, or find a median line structure that allows us to add and get a trade from even 118 to 119, right? Better to have that than to try to get the exact low, okay, and get taken out of a few trades before you get the right one. But I believe firmly there's no one size fits all. Everyone's going to do it differently. Okay. I'm just trying to give you the high probability levels, right? And when appropriate, put in those orders that you can put in overnight. So let's take a step back from dollar yen and want to look at some of the other trades that we are involved in or looking to get involved in. One, of course, is the British pound. So with the pound, here's a question from Eileen. How far away in pips do you usually put your stop on your swing trades? Well, with that, Eileen, it's a function one, you have to have a tradable low, okay? I obviously prefer a tighter stop because then you can use more leverage. If you trade, let's just say that when we're coming up on, if we start getting down into 116.40 again in dollar yen, okay, I'd want to see how the market reacts, see if it holds, see if you get some sort of response. That would mean like an hourly reversal bar, okay, or a 4-hour reversal or something like that, but preferably an hour because things are going to move very quickly, on this in this market, okay. But there's not a right answer, to be quite honest. If you have a 100 pip stop, then you probably want to trade only 1 times or 2 times leverage. If you have a 30 pip stop, you could trade, a little more, 3 times, whatever. That's, the rule, I think, is the leverage times the pips. So it could be 100, it could be 30, but then you can trade more leverage. Obviously, the caveat there is that when you have a tighter stop, it's probably less probable that that trade works out because it is a tighter stop, so you're not giving yourself as much room for error, okay? So if you have a tighter stop, say less than 50 pips, you might want to only go 2 times leverage, okay? But if you have 100, you go 1 times. So there's really not a right answer. And as someone who trades technically and, means obviously I put a lot of emphasis on market levels, zones, and trying to time it, it's not really, I don't think it's really worth me trying to put, just an idea because I like it with a big stop. If I'm going to put on an idea, I want to get a tight stop. So for me, that's I'd say less than 50 pips, 50 pips or less. Okay. Dale's got a question. Ari, question on Aussie Kiwi. I will absolutely go over all these things. I want to go through real quick some of the stuff I wanted to cover, and then I will open up the floor to questions, and I promise that your two, Dale and Ari, will be the first ones that I answer. So let's look at the pound dollar because we're involved in that setup right now. So one, talk about why we got in this setup in the first place. You know, when I review the weekly charts and everything, and I typically do it on the weekend, although this week I did it on Monday, just because my baby, my 6-month-old, not quite 6 months old, is teething, and he is very fussy. So I had to do a lot of weekend daddy stuff to let my wife kind of relax. So I had to update the weekend charts or the long-term charts on Monday. But looking at those long-term charts, I knew that we were at a big price level, 151, more or less. Obviously, we traded slightly below that last week, 50.34, and this week, 50.77. But having this parallel here, okay, which crosses the lows here in 2010, as well as the lows in 2013, and then the parallel to that extended off the 2011 high, ended up crossing through 3 weeks up here, and you got that high, here in July. Okay, so to me, this is a pretty big level and one that I think we should bounce off of. So that was one in the back of my mind. We do have a gap here at the beginning of the year, so that could be a breakaway gap. But just having this level here was good enough for me. Two, we had short-term slope analysis, right? This is the slope lines that go, off of these lows here from October and November, and when extended, you actually, we had some resistance come here in December, right? And we were following this triangle for a month, it seems like, or 2 months, it seems like, month and a half, and things finally started breaking down, of course, on the first trading day of the year. But we were bouncing from that level. Then when we looked at the short-term picture, and this was what I put up, I think, on was it the 13th, or sorry, the 12th. Yeah, here's the 12th. I had a pound-dollar chart. Talked about we had it highlighted in blue, if you remember. We talked about the 50.34 rally to 194 was promising because you could count it in 5 waves, right? 1, 2, 3, 4, 5. Is the prettiest thing ever? No, but it's fine. So the implications were for a 3-wave drop and then a rally. As you know, I put the order in, and I just put it in at 150.91 because daily reversal supports 50.88 and went to bed. Okay, if it would have been stopped out, that would have been a bummer, but it would have been, a stop for, 60 pips or so. And to me, the reward to risk outweighed it. So here we are. We're continuing to ride the, this pitchfork higher. Okay. Now, look, we're getting into resistance. We basically got into it today, 52.68. I mean, the 52.70 to 53.20 area is resistance. Pound does have a tendency to kind of spike at its turns. And with that, kind of hesitant to say, this could be the turn up here. But look, I still think that we're in a good position. The stops tighten down here below this 51.40 area, and basically, as long as here's an updated one, is I added the parallel here. This is something that obviously you notice that I do. When I have the bold gray lines, you can see, say this hasn't come into play yet, right? But you can tell the median line has some sort of validity. I mean, we have traded around it. We have wicked into it, okay? So I do think the slope has some validity, and we might as well continue to follow it. So when you have this and you haven't reached the lower parallel, maybe you won't ever reach it. So you draw a parallel to that, and extend that from the most recent price low. Okay, so this might come into support now, this line right here. Okay, so when it comes to, you know, adding to a trade or something, you would look to do just that. You would add on to these levels. Okay, add on to the parallels. Brendan, I'll cover your question real quick because it has to do with the setup. So when you take account of wave 4 overlapped and wave 1, right? So you got to remember this is an hourly chart, and you also have to remember that on an hourly chart, and actually this is stated in the wave principle. When you look at hourlies for wave counts, it's best to look at the closes because obviously FX is a highly leveraged instrument, so you're going to get a lot more spikes and whatnot. Just the nature of the beast, especially in the pound. But when you look at the pound, you can see on a closing basis where actually was no overlap. It's much cleaner, right? So if we count this as 1, 2, 3, 4, 5, A, B, C, right? And then here we seem to be working our way higher. And I would expect to get one more high out of this just because, you have what appears to be kind of a sharp third wave movement here. Right, so on one hand, we've got this really long-term support down near 151, and we're kind of, it'd be great to just hold on to it and let it go up 1,000 pips, right? But on the other hand, we have a pretty clean wave count on the short term that's, 1, 2, 3, and this is most likely a fourth wave. Okay, so with that, we're not going to go for a super aggressive target. We're going to go for a more what I consider to be a fairly conservative target, target that 153 area. Okay, an aggressive target would be like half of this, which would be up above 154. Okay, so another reason why, and some people might be scratching their heads out there today saying the S&P is down 28 points and the British pound is actually up 50 pips. What the heck's going on, right? Well, glad you asked. This is where facts can be extremely useful, all right? It cracks me up when I hear people say things like, oh, it's risk aversion and the dollar's going to rally or whatever and blah, blah, blah. This is not 2008, 2009. In fact, did you know that the highest correlation, Ari, I will definitely cover Aussie Kiwi. I haven't done it yet. I'm going to get to those questions at the end, and I will definitely look at Aussie Kiwi for you. Anyway, but you know that the highest correlation right now between the S&P 500, this is on a 1 quarter rolling basis. Okay, so the highest inverse correlation is the S&P 500 and the British pound. Okay, it's the highest correlation. I can show it to you right here. So this is the S&P. This is an hourly chart of dollar yen and S&P 500. I'm going to put up a chart of dollar yen, put pound dollar. All right. So this will show us all right. Here we go. So right now, this is the British pound in blue and the S&P 500 in black. As you can see, we have the highest inverse correlation basically since, since all the way back here in 2002, December 2002. All right. So this means that, as S&P's gone up, the pound's actually tanked. All right. So those that are expecting the British pound to plunge based on correlations with stocks are just completely wrong. not saying the British pound can't tank, right? Certainly can, but it's not going to be because of stocks, because that argument would actually tell it to go the other way, because if stocks come off, you'd actually expect the British pound to rally because they've been inversely correlated now for quite some time. The highest inverse correlation we've had in years, okay, over a decade. So we also had that at our back, right? With the idea of the S&P coming off, not going to have to worry about that being pound negative, it's actually pound positive. Okay, so that's with the British pound. Again, looking for support at this point. I would be looking for support along this line here. It's interesting to note that 3, 4 a.m. obviously is a super interesting, exciting, and important time for the British pound and the euro, being that's when London opens, Europe opens. So I like to look and see when you have when 3 and 4 in the morning, when they intersect certain reaction levels or certain slope lines. And this one intersects at about 51.90 tomorrow morning, which is the former highs up here, right? So 51.90. This one, the lower one, is a little closer to 51.70, and I have that drawn because it was this spike low down here. Remember, that was on the first Sunday of the year, so that could be an interesting level. So I basically am putting 51.70 to 51.90 now as possible support for British pound before we go for that 153 test and then the bigger pullback. Okay. Now, I wouldn't necessarily advocate adding to this trade just because, again, this is a counter trend trade. Okay. The yen trade, I don't necessarily consider counter trend because I think the trend at the moment is sideways. So whether you're trading up or down, long or short, I don't really think there is a counter trend. It's a range trade at the moment. The pound is still counter trend to me. Okay, I do think we still get another low, and then we probably get a much larger rally. But to each their own, of course. Okay, on this. Now the Australian dollar. Here's an interesting one. Remember, we'd had account something like we had previously something like A, B, C, right? With a big old expanded flat pattern. Well, the decline here, okay, from 82.54, and this is a good example. This was the original line, right? This is the original line. These are the slope lines from August and October lows. And as you can see, this one is the one that helped us get short, or not get short, I didn't put a short out, but identify resistance up here earlier this week. We actually put in the Kiwi short, which so far has been a slightly better trade anyway. But this decline from here, 82.54 being a three-wave affair, actually kind of changes things a little bit, I think. Okay, what it means is that you could have an expanding triangle underway from back here at the December low. It also means that you could have a very complex correction underway, with something like a flat and then an X wave and then getting another leg or a triangle or something from here. Either way, I still, for trading purposes, it's still more important for me the price levels and the reaction lines, the slope lines. So with that in mind, and here, this is an example of taking the slope line, a parallel, and extending from the price extreme which you'd made here in order, because that'll keep you from calling the end a little too early, right? So if you get up here and you start breaking this line, you're going to be wanting to trade a reversal and you get real excited, except really it hasn't reversed, hasn't really broken the plane yet. The slope is still here and still in effect. Okay, it's going to happen anyway. You're going to get tripped up, but it's part of trading. But if I measure the 61.8 level here, if this is indeed some sort of a triangle pattern, that puts us at 82.04, and that puts us intersecting here tomorrow morning during U.S. hours, right? So that order, which is currently 82.10, is going to be moved most likely to 82.04, all right, for the Aussie dollar. And again, with the Aussie dollar, you know, kind of similar to the pound, in, you know, the fact that, look, we've got really long-term support here. Okay, so I have a feeling that like the next like 300 to 500 pip move is probably higher, but maybe not before another, you know, 100 to 200 points on the downside. There's a weekly chart I just showed you. In the daily, of course, right? These are always updated. We did just get today's drop. Did also test its daily reversal support at 80.76, almost to the tick. Okay, but you know, this still has us looking lower. Okay, maybe the final low comes in near 79.70. In fact, if that were to happen the rest of this week, it would almost be too good to be true. Get that Friday low, get it on the 127% retracement of the latest leg up, 79.71. And it would also get the median line, the long-term median line. That median line is from this structure right here. Okay, going back to the October 2013 high. Ahmed says, what's the target for Aussie? Yeah, the target's going to be 79.75. I actually think I put two targets in there. In last night's order, I put the excuse me. Last night's order, I put up the leverage a little bit because it was showing more confidence in that trade. With an 82.10 entry, 82.60 stop, and then two targets, 80.80, 79.75. So the first target would have been 80.80, which of course is daily reversal support, which was actually hit this morning. The second target, of course, would have been, or is 79.75, which is still going to be a target. Okay. If we look at actually let's look at the Aussie dollar compared to last year again, kind of much like we're doing. So something to understand about Aussie. Here's Aussie. Here's, we open the year, right? New low for the whole trend move, for that matter. Okay, a pretty nice rip. Started to come off again. Somewhat similar to last year, right? Opened the year. We had not a new low for the whole move, but then we had a rip. Okay, the real rip ended up being giving way and retracing to a new trend move, and then we made a low on the 24th. And this is where the seasonalities come into play. Okay, here's Aussie seasonality. So Aussie seasonality really starts to bottom out the week of, not this week, but next week. Okay, and then really across all, 5, 10, 15, 20-year seasonal tendencies, it really starts to turn bullish across the board at the very end of January. Okay, so while I'm looking on the short side for that, 79.75 potentially, the next bigger swing is likely to be on the upside. So it's good to keep this stuff in your head and keep it in mind if we're sitting there and we see the Aussie start to get into new lows. We'll look for the pattern to identify some sort of a low. All right, let's look at let's look at pound Aussie. Another trade I wanted to look at is the dollar Mexican peso, because So here's the daily, right? This is the long-term median line, right? We topped on the upper parallel from it. This structure goes all the way back to the low in 2013, in May of 2013. And this is really the first big support, okay? And it's down near the low from 12.17 at that point. So we could end up with some sort of a range here as well. I have wanted to get short here, just haven't had much of a shot. What I'm going to do here in tonight's chart, what you'll see is you'll see a new parallel parked right over here, because it'll be extended now from this high that we made this morning, okay? And this will be a level that you're going to want to watch for resistance moving forward, okay, to trade against this high. Because if that gives out 1470, then we can go back to looking potentially at this level up here, 1474 in the upper MLP up here. So support still I down here, 1445, 1450. You could still get down here and then get a rally that runs into this line. But this is now what's more than likely going to be your, call it, operable short-term short position, to trade against the high here that we made today, 1470.50. And this is actually a pretty good high to trade against. As you can see, it's a big old outside day, taking out the previous the previous two ranges. So this is the high and the low for the whole week here so far. So it's a decent level to trade against. It's not like you're trading against a random level. If you're putting some stop in at some random place, this is a pretty good place to put a stop above a big outside bar like that. The dollar knock as well, and dollar knock, dollar mex, we're starting to get into kind of synthetic oil trades here, right? See. Don't know if I have the data that goes back far enough. I wish that I had data go back a little further. In any case, there is a really long-term median line up here. Look at that. So this is a median line. This is obviously a weekly chart. We're going from the October 2009 low, 2010 high, which was June, and then the low from 2011. Okay, that slope was pretty good slope for support, for resistance, really launched off it again. It came into play again in November. And here's the median line right now. Okay, so for this chart, what you do here, probably put this here. Kind of look to take this down to this support, which is all the way down at 741 or so, 741, 742, depending on when it gets there. A way to trade this setup, and this again probably going to be an order that's put in later tonight. You have this reversal bar here, okay, on the 7th. We're getting an outside day, bearish outside day here today. Okay, so that reversal 769.66, right? That would be a level to put a short into 769.66. Let's see if we can put that on the short-term chart and see if we get anything interesting. So 769.66. All right, so there's not a whole lot to look at here with this. I just kind of have this up. Look, not much of a structure. Let's see if we can draw one here. All right, so this gets a little more interesting. So 769.66 intersects tomorrow late afternoon for this one. So that might be an area to look to short if you get a rally into this level tomorrow afternoon. Probably come off a little bit first, down into support. Between these fibs, a rally in here, want to sell it. Again, this is the into tonight's report. Point is that I think there's some good opportunities to swing for some bigger gains in some of these European pairs. Okay, might take a few attempts, but dollar NOK, obviously it's been a historic decline for the NOK. Crude oil, it's been a historic decline for crude oil. The two are very much related. This is the highest correlated pair with oil. Dollar NOK is not dollar CAD, but dollar NOK. So it might give us, an opportunity to enter into a very high reward to risk situation. Here's a good question. I was going to look at this next anyway, so we might as well cover Euro Yen. So Euro Yen looks to be in the bounce zone. Is there something particular we're looking for? Yeah, so Euro Yen has indeed entered the bounce zone, right? Here we are. Okay, this is it. We got in there right in the middle of it today. We're at the bottom of this here, 137. We just tagged the October 30th low. Okay. In fact, we have fully retraced now, not just come back to where the BOJ closed. We came back to all the way before BOJ day even started. It was all the way back here. Okay. There's another possible level slightly lower. The biggest thing Chris is asking, is there something particular looking for is for, asking why I'm not long yet. I mean, look, I have no interest in catching the exact low tick and the exact high tick, although sometimes that actually happens. Basically, this was short-term panic low under the lower parallel is what we're looking for, right? We got that so far, okay? But as far as a swing position is concerned, these are setups that are more structured. So if I put stuff out in the report that says I'm looking for this, I'm looking for that, if you want to be more aggressive and really go for it and try to, there's plenty of trades here, like I mentioned, trading, into these lows and whatever, looking to pick up panic lows and stuff like that. Experienced traders, feel free to do whatever you wish to do. I'm here to give you the levels and everything else. Also give you the longer term setups, okay, when I see them, and I'll put in those orders when I think it's safe to do so, right? So I can't there's no way I'm just going to say go long here at 137 with a stop at like 134 or something. I mean, my point is that right now there's just not, there's not a tradable low nearby. Okay, so dollar yen's a little closer, I think, than euro yen, just because the structure, right? We have that triangle. Euro yen might want to make one more low. Okay, might test this level down here, or even down here, 36.20. All right, if it got down to 36.20, I'd probably be willing to just go long with a 35.20 stop. Okay. Also the euro dollar itself, is, I should say not necessarily, inspiring the most confidence in a euro yen trade, so it's almost like I'm going to stick with dollar yen at this point. Again, if euro yen gets, a clear panic low at 36.20, then that's a different story. But I'm not going to take a trade just because I want to take the trade and it's in the right place. It's also got to look right and feel right at the time. But yeah, we are reacting at the right zones. Let's go back to the euro yen and say, what am I looking for? Well, let's look at, some of the panic lows we've had. This is the October one. Okay. broke a pivot on the upside, okay? Pullback, spike bars, pin bars, spike bars, whatever you want to call them. We're starting to get some of that here in dollar yen or in euro yen. This is one this morning at 5. Also interesting to note, obviously, that euro yen made its overnight low during Europe. Dollar yen just made its overnight low here. The S&P is actually plunging right now as I'm speaking. We're down at 1989 at this point. And dollar yen is 1690, so it's actually holding up fairly well. It's like a delayed reaction in the S&P to everything that's happened in the FX market for the last, 7 months. I guess the best answer, Chris, I can give you when it comes to what exactly I'm looking for, you just kind of know it when you see it, to be honest. I mean, do I think that euro yen a week from now is going to be higher than where it is now? Yes. But that's not, you might have to, it could go 100 or 200 points against you from here as well, right? So I think we're a lot closer to a low in euro yen for a bounce of a couple, maybe all the way back to, 141, just based on the price levels, the structure, and how this decline is, how quickly this decline has escalated. In fact, okay, so this is a synthetic volatility. Oh, this is a 5-day, 20-day. All right, so here's a 20-day synthetic volatility indicator. Basically, when it's really high is when you want to buy. When it's really low is when you want to sell, but the caveat there is that it can remain low for a really long period of time. Usually it doesn't remain that high for a very long period of time because when it's really high, that indicates panic, and, well, panic doesn't last that long. So let's look at this indicator right now. We're going to end here today higher than we've been all the way since February of 2013. This indicator is almost as high as it was at the lows back in 2012. You can see here the low in June 2012. Even some of the big buying opportunities in euro yen in 2013 June were higher than that. We're higher than we were last February at the low down here. We're higher than we were at the low at the buying opportunity here in October. Okay? So this is screaming buy. Okay? Now, on the other hand, there is always the possibility of something like this happening. That's why you use stops, of course. So even if that were to happen, I still think you get, a nice rebound before then. And then if that rally fails, then forget about it. We could be making a larger topping process here. But yeah, a couple, 400 points on the upside might be in the cards here pretty soon for euro yen. This is going to be a level to watch right here too. Just kind of stuck out. Who knows? Maybe we can get that, 36.20 to 50 tomorrow. Who knows? Or some point this week. All right? These former lows down here. Who knows? Maybe we get that. But yeah, euro yen getting close. So Emil's asking about pound yen. Sure thing. So as you know, I like pound dollar on the upside. Pound yen's a whole different animal, of course. The thing's a beast. Well, the obvious level that's going to stick out for pound yen are these former highs up here. Get rid of that. It's back 74.80 to 75.40 in pound yen. Okay. Yeah, I mean, I prefer to stick with the euro yen just because the levels are much cleaner. Okay. On a long-term chart, pound yen, is there anything here? You know, I don't really have the pound yen charts marked up. This is something you might want to watch. This is, again, very long-term. It's a weekly chart, but this overlaps. You can see these former highs up here overlap with the trend line, you know, towards the end of this month. If you're looking for a longer-term buying opportunity in the pound yen, you might keep, say, write down on a piece of paper and stick it on your computer desk or something, 175 pound yen end of January, because that's when they intersect here in a few weeks. Okay. You know, with 174.90, 175.40, that might be really, you know, a really special place to get long pound yen. On the near term, though, yeah, I'll stick with euro yen. Also, you know, it's with euro yen, you know, rather than worrying about all the yen crosses, because you could trade a whole bunch of them, it's better to kind of trade some of the individual legs and dollars, like pound dollar, and you know, and if you're going to trade euro yen, pick a few, like dollar yen, euro yen, and you know, that way you leave yourself less decisions. Okay, and less decisions in trading is always better. It's hard enough. So by limiting, you know, the number of pairs that you're looking at for trading opportunities, you're limiting, you know, kind of the room for error, if you will, or the room to make mistakes, I think. So by focus, that's one thing I did, as you noticed, over the last several months. I used to look at so many more things, and to be quite honest, I was like, what am I doing? I've never done this before. Why am I, you know? So trading's definitely improved by focusing on a core group of dollar crosses and a core group of euro crosses, like euro pound, euro Aussie, euro yen, right? Now look, every once in a while, there might be something that pops up, like a pound Aussie or a pound yen or something, okay? Maybe, you know, every once in a while, I'll see something in the scans that show up and say, oh, wow, this really sticks out at me, and I'm going to look to take this, put an order in on this trade. I mean, pound Aussie is one example. If you remember, we actually had, this was crazy, right? Remember this? This was back on the 17th, I think, 16th, 17th. We actually had a pound Aussie short here that was stopped out above 92 for there's minus 70 or 80 pips or something like that. I don't know. And we ended up getting stopped out on the days, not the high of the day, but the high of the move, right? We stopped out at 92. We went to 93 plus that day. Market played around for a few days, and then we're, 800 points lower. So here's that updated chart, by the way, pound Aussie. We just came off of this huge lower parallel. We're kind of looking to almost be in this trade synthetically, right? We're already long pound dollar, and we're looking to get into a short Aussie dollar. So, we're in effect playing pound Aussie long, right? Just getting into the different legs of the cross at different times, right? So it's almost better to play it that way a lot of times because, again, you're narrowing your focus a little bit and you're really honing in on what's important. Without doing that, I'm not sure we would have been able to catch, or I would have been able to catch the whole move in the dollar yen. We talked about it last Wednesday, I think, and that was, really stalk the prey, right? Stalk your prey, and that's what we did with dollar yen. We waited and waited. I wanted to be in that position for days, but I waited and said, you know what, we're going to get a post-NFP spike, and if we get it, that's when we're going to go short. And, you know, by waiting and waiting, being patient, you can sleep well at night, and then also, you know, really be prepared to take action. Let's take a look at, we'll just talk a little bit, touch on Nfp levels, okay? And then I'll go over the questions, like Ari was asking about Aussie, Kiwi, and then I had another question. Let's see, Dale was talking about adding to a trade, so I'll look at some of those. But the NFP levels, so I'm just going to bring up an hourly chart, and I'm going to take all the lines. I'm going to look at nothing on it. So first of all, you know, I will look at volume, obviously, and I'll look at the hourly close of that level for volume. Okay, but there's guaranteed to be a, you know, you can know where the volume is basically by knowing where the huge spike bars are. Okay, and it's guaranteed that one of those is going to be NFP. Okay, so you don't need to go real short term. You can look at an hourly chart for this, and if you take the you know, to find where the 9 o'clock, or it depends where you are, but it's obviously 9 o'clock bar in New York, and if you're, you know, in the, you know, the central time zone, it'd be 8 o'clock and so on and so forth. But the 9 o'clock bar in New York is when NFP happens. It's 8:30 Eastern. So the close of that bar is your NFP. Just put a horizontal line on that. And, you know, you might want to make it red or something. I don't know, just to distinguish it. It's NFP level. And this gives you your NFP level. All right? Testing. You guys can still hear me, right? Okay. Yep. Okay. I'm told we're good here. I guess some people may have lost audio, but hold on. Okay. All right. So you got it back. Good. So this is your NFP level, and it's, you know, it's just good to know, especially, you know, when for a time like right now with the euro, for example, which is, you know, kind of been trending sideways since NFP. Okay. So we know that the NFP level is 117.87 is where we close. You can see that level acts as support. You know, this is something that you can trade off of really short term. You know, kind of scalp off of it, if you will. And we're actually trading at it right now. It's very interesting to note that. You know, with pound dollar, the NFP level was, I believe it was that one right there, close 119, yeah. So is that one right there, okay. 51.19, you know, gives you a nice pivot, if you will, to be long or short. You know, it gives you confidence. Obviously, we put our trade in to go long pound at 50.91 because we had the 50.88 daily reversal support level. But, you know, I knew that 51.19 was the NFP level. So it was like once we, you know, I got up in the morning and saw that we were back above that level, you know, I'm more likely to just sit with it and let it play out rather than be nervous and take it off because I have a nice 100 points or whatever. You know, we're going to get more off of that because, you know, it's just added to another +1, right? It's another +1. So, you know, if you judge your trades on how many things you got going in your favor, you can kind of chalk this one up to a +1. Eileen's asking, how do you find the NFP level again? Right, so again, you know that it's, you know when NFP is, it's the first Friday of every month, typically, except for January, it's usually the second Friday, and you know that it's going to be a high volume bar, okay? The point is using high volume bars, right? And you always know that NFP is going to be a high volume bar, it just always is, okay? So find the bar that NFP was on, and it's NFP is always the same time. So if you're on the East Coast in the States, it's going to be 9 a.m. bar. and then you just draw a line on the close. Okay, so Aussie is an interesting example right now. Okay, we're pretty much trading at it right now. I don't see a whole lot to use as far, as this is concerned. Based on the pattern, we obviously have potential for a move all the way up here, potentially if we have some sort of a broader triangle or whatever. But it does add, another layer. Might tell yourself, well, I'm not going to put as much leverage here on this trade because we are a bit, we've got a -1 at this point if we're entering up here, right? If we're entering up here at 82.10 or something, 82.05, 82.10. We're at that point we're above the NFP high volume level. Dollar yen, that NFP level, obviously right here, 109.50. That could come into play eventually as resistance for a D wave and a triangle. It's quite possible. Kiwi was 78.08. We're actually still short here. This is an instance, obviously, that is difficult because we've tightened our stop to 78.10 because it's this high here. And with Kiwi, I'm, I think, as I've said before, I think Kiwi is going to be the next, really the big one to go on the downside against the dollar at some point this year. Again, I don't think it happens soon. I think it probably happens closer to when the larger seasonals turn bearish, so that's probably not until the second quarter. But but I just want to, I want to cover that anyway. Sure. So, all right. Now we get to some questions. I'm gonna go over Aussie Kiwi first for Ari. Aussie Kiwi. Okay, so here's a structure, a long-term structure for Aussie Kiwi. Okay, and these are long-term parallels. Glad I already have them drawn. Basically, you're below this. Okay, this median line. Be looking for this to act as resistance at this point, and interestingly, it's fairly close to the former lows back here. Okay. From July of last year, it's 106.20 or so. So we're getting pretty close. And then this is a short-term one. So here's a short-term one with the structure off of this high. As you can see, the median line, the market did consolidate around it and then really broke down from it. So again, I'd be looking for this to act as resistance, right? It's basically at 106.20 over the next several days. Okay. So Ari, I'd be looking at Aussie Kiwi to find, say, 106.20 resistance, okay, over the next several days. Now, on a really long-term basis, going back like a couple decades, and I don't have this data up to show you, but the Aussie Kiwi exchange rate has basically traded between parity, and like mostly 135, 150, okay, for decades. So we're obviously at the very lower end of that range, okay. Now, keep in mind my previous comments I just said about the possibilities of a Kiwi kind of being the next one that really collapses, which I think is going to be the case at some point this year. I don't think it necessarily happens until April, though. That is when I would be looking for to maybe position for a much larger Aussie Kiwi advance. Just let's see if we can get. I don't have a lot of data on here for Aussie Kiwi, so I just have the 5-year performance figures, but it looks like the 5-year performance figures, they turn down again in March, they turn up again in July. So if I can import some data, I can send you something on that or put it on the site or whatever on the possible seasonality. But if we're looking here again at Aussie Kiwi on a shorter term basis, as in like the next, week or something, I would be still looking on the downside, albeit allowing for, say, 106.20 to 106.50 resistance. Okay. In fact, from a wave point of view, if you will, this would be your former, this is a former fourth wave up here. You can see we're stalling at this level, but the next one will be here, 106.50 or so. So that gives you a zone right here. All right, that gives you a zone for resistance right about there, 106.20 to 106.50. Okay. Now, if the market can really establish above that level, things kind of start to change a little bit. Let's look at the long-term. You do have a long-term divergence, okay, with RSI above 40, above 30, I should say. We are, however, starting to get on the daily chart. We're still getting. You can see the big red and the big blue dots. These are in trends. These are going to work really well. These are the RSI signals that I developed some time ago, and the big red dots are basically trend cells, right? And once you go sideways, like we have been for most of 2014, it's a pretty miserable strategy to try to employ. It's not going to work out too well, but we are getting those trend cells now. Okay, so if this drop to a new low was a total fake out, and we are putting a low, then these things are going to obviously fail miserably. But I would still look on the downside in Aussie Kiwi as long as below, say 106.20 to 106.50. Obviously, I'm not saying a spike through it, but that's resistance. The market can establish over 106.50. Different story. Change the tune a little bit. Maybe be flat, as far as the bias is concerned, and then look for potential buy on pullbacks or whatever. Look at the short-term trade. Okay. In general, can't stress enough, I do think that 2015 is the year that Kiwi finally makes that big double top that, has been putting in since 2011 and absolutely falls apart at some point. So eventually Aussie Kiwi turns up. Ari asking, did you cover Euro? Yeah, Euro is, I still think, we've kind of been looking at this for a while, the same thing here. I still think that the low is going to come on these lines. So it might be near 116.50 at this point because, we're just kind of dripping lower. But it doesn't mean I sell here. There's still resistance. You want to sell on slope resistance, okay? And slope resistance at this point, this median line still comes up closer to 119.75, right? And remember, we had with the euro dollar, we were following that for, this kind of like this choppy decline for the first week of the year. Okay, we could be going into some sort of this could be like a diagonal right here. Okay, in which we have a 5-wave move down, and then we get some sort of a move back into 119.75 to 120. Bottom line is, I don't have anything really of note to give you, Ari or anyone else, on euro dollar on a short-term basis right here, right now. All I can say, is that I'd be looking for resistance up here in this zone from 119.75 to 120.86, but I'd also be looking for support down here, again, near 16.50. And don't forget that 2005 daily reversal support close was actually, what was that, 117.17. The low we made today was 117.23. Momentum slowing here on the downside. We're going to get a crazy move on the upside at some point. I just don't know, obviously, when and how it comes. if we start to get formation of a base here, then you can bet that I'll be looking on the long side. For now, if we do end up getting something bigger on the long side, as far as the dollar, pullback is concerned, we should be, doing well with pound. But yeah, I had a question this was Dale asking a question about adding to trades. So let me show you. Let me give you an example here, Dale. So look, let's give this is the 12th. This is Monday's update. So on Monday's update, look, we were already short dollar yen, right? Ari says this seminar every Wednesday at 1, Ari, that's right. And then this is also recorded, so I post it to the website, and you guys can watch it anytime. So if you can't make it, this will always be recorded and posted to SB Trade Desk. This was going back to a question for Dale asking about adding to trades. So a lot of what I like to talk about with some of my trader friends here is trading a position. I mean, that's really how it's done. You make your money through size. Okay, there's no doubt about that. By trading larger size, larger leverage. Okay, so this was posted on Monday, and we had our dollar yen short position on, call it a core position, whatever you want to call it, from post NFP up at 119.10. It was, kind of gave it a confidence level of 2 because I thought it was going to be a really solid trade, and we were in that and floating a nice gain. Well, I also obviously always put these zones up, right? Even if there's no so-called new orders to put in, I'm always going to have my charts laid out with where I'm looking to trade, right? These are zones that I'd be willing to trade at that I think offer good reward to risk. Does it mean that you just put orders in here? Not necessarily. It might mean that you want to look to see how the market trades up there, put some 15-minute bars, hour bars, whatever, and see if you can start to get some wicks and potentially add to your trade that way, okay? So that was on Monday, and our zone that we had lined up there was, it was what was it, 1.8. Good Lord, here we go. It was 118, 70 to 85, basically. All right, so 118.70 to 85. That was posted Monday, so that would have been for Tuesday. And that was right here. You can see the high that we ended up getting was 118.85 or 84 on Tuesday morning. Okay, we were still trading up there 10 a.m. yesterday before this thing really started to fall apart. Now, me personally, I did not add to this trade when it happened because I was also looking for that to occur on the upper parallels, which would have been up here, and it never reached there. It was in the right price zone, okay? And I probably should have been a little more aggressive just because, look, this was the price level we were looking at, and we had a perfect doji on the hourly chart. We were consolidating. Market started to come off after that and fell below the week open. So, as far as, exactly how much to trade on the short side, or, when you're adding to trades and increasing your size, I can't, everyone's different. Only you know your financial situation, right? So only you're comfortable trading a certain amount and losing a certain amount, okay? And you have to think about that before every trade. Well, more importantly, you have to think about that before you go in to trade, okay? Don't think about that as, before you're about to make your trade, right? You want to have all that figured out. As like I said before, it's better to have less decisions to make, okay? Dale says, what do you do with stops when you add? Okay, so I think of each new trade. Here's dollar yen, by the way, about to take off again on the upside, 117.18, as the Dow is just still down 22-something points. good thing about that, we're starting to get into resistance now, 117.20. Good thing about this is that we're getting a nice move off the lows that we can work with, I think, in order to try to put orders in tonight. But so this is a good. Dale says, what do you do with the stops? So first of all, think about the best reward to risk that you're going to have on the trade is going to be on the initial entry once you identify the setup. Okay, because at that point you're trying to get in with a tight stop, and you're also trying to give yourself the bigger target. Obviously, the risk part of the equation is more important than the reward part. You can have the best reward to risk trades all day long, but if you lose on 75 or 80% of your trades, it doesn't matter a whole lot. So with that said, think of each entry as its own trade, as its own reward to risk proposition. Okay, let's look at pound dollar right now. Okay, because we're in this trade right now. So we're long here, and at this point, we've got the stops. I put them under here, so I put them a little under here, 151.4. I put them 151.20. They could probably be a lot tighter than that, but I hate to get taken out on the spike of a good trade. So, look, we're still looking towards, say, let's call it 153, but let's even say that 152.70 is going to be where you want to exit the whole position, and that tonight, I'm going to go to the updated chart. Let's say that tonight the market comes off and dips into 151.90. Okay, dips into 151.90, and at that point, our target being 152.70 is still going to be 80 points higher. And let's say that the new stop's going to be 151.40. Okay, so 151.40 is going to be 50 pips on the downside from 51.90. And you have 80 pips on the upside. Now, are you giving yourself, if you're going to just put that order in, are you increasing your reward to risk by enough to take on that extra risk for 80 more points compared to losing 50? That's for you to decide. On the other hand, let's say that you get pound dollar comes down and spikes lower into 151, 70 or something tomorrow morning, and closes up at 152. Okay, and you get a big, reversal bar. Well, at that point, you want to put your stop below the reversal bar, right? So when you do that, you're taking on 30 points of risk for, say, an extra 100 points of gain, and that's something you would definitely want to do. Obviously, when it comes to adding trade, and more, what I like to call it trading the position, it's kind of not one size fits all. It's going to be your what you're most comfortable doing. Some people are comfortable trading 4-hour closes, for example. Okay. Nikki Armstrong asking about the SMS. Yeah, so you can you can configure SMS, with the Twitter stream too. If you follow the SB Squawk service, you can configure that with Twitter. I think we have links in showing how to configure SMS with Twitter. Let me see if we do or not. So, when you're Oh, real quick though, Dale, as far as trying to add to trades and whatnot, use these shaded boxes, okay, when we're in trades to look to add to trades. Okay, Nikki's. Okay, all right. Okay, we'll look into that. We'll see. So, all right, Nikki, thank you very much for your suggestion. We'll check that out. Also, keep in mind, a lot of trades are actually, the swing trades and stuff are obviously posted here, with the orders and whatnot. When it comes to Dale's asking about adding to trades and Nikki's asking about SMS signals, but when it comes to adding to trades, that's something that you really, it's something we can teach you. Not something that's especially we can like walk you through, because it'd just be, it'd be like all day long and, in and out very quickly. It's not something that can last. If I'm going to give you a trade, I want to give you something that can last for a while. Okay, dollar yen now, 117.30. This thing is on fire. Unfortunately, we are not yet long. But at least we had the right idea and we got out of the short position. So as we start to get up through these levels, it does look like we are playing catch up with January 2014. Dale's saying, yeah, it's FIFO. It's first in, first out. Exactly. But at the end of the day, it actually doesn't really matter a whole lot. What I suggest, too, is, as far as adding to trades, is add smaller amounts when you get into a trade. Okay? So let's say that your first position is a 50,000K position. Okay, your next position when you add to it should be like 25K. The next position you add to that should be like, 15K, right? You think of it as a pyramid, which you build from the bottom up. A pyramid's the biggest at the bottom, gets smaller at the top, so the last position you enter is going to be the smallest. And that's how you skew the reward to risk as well. So there was that question, and there was another question here from, let's see. Oh, pound Kiwi. Okay. Looking at pound Kiwi. Well, we're actually synthetically long pound Kiwi because we're long pound dollar and we're short Kiwi dollar. So we're actually long pound Kiwi. Pound Kiwi itself, pound Kiwi itself, I can say, is something that I haven't really looked at a whole lot, but let's take a peek. Again, a lot of times I like to just trade the dollar legs, and then what we'll do is if we end up in a position that happens to be like, like we are right now, short pound Kiwi, or long pound Kiwi, we just end up in it. So what you do is you take the slope here, you want to see if we have anything there. And lo and behold, what do you know? Look at that. So this seems to be the proper slope to work with. As far as the short term is considered. Let's look at that there. So these here, Eileen's asking, how do you draw these parallels? These are just trend lines, okay? Now, with the pitchfork, let's take the pound dollar again. So if you want to draw a parallel for a pitchfork, you just right-click on it, click New Parallel, but obviously you don't want all the lines, so just get rid of all the lines except for the handle, and then I make that gray because that way I know that it's something, it's different. I added it myself. So the median line's black and the extra parallel I add is gray, and then the thin ones are the upper and lower parallel from the structure here, but that's how you would do that. So with this pound Kiwi, well, I'd say that's a pretty good level. If you just look at this thing, we'll get rid of this here. If you just look at this, probably on a longer term chart, here you go. This is actually a chart that goes way back. I think this might be one of the biggest head and shoulders that I've ever seen. But we'll call it a possible head and shoulders at this point. And to me, this speaks more to the potential for the Kiwi to absolutely collapse. Okay, and this has been brewing and going on for years and years and years, right? I mean, goes back to 2011. This is 2015 now, so this has literally been forming for almost 4 years. And once this thing breaks, okay, we're probably going to go to 2.3 extremely quickly. That would be 6,000 pips from here. That's Kiwi pips. So keep in mind, Kiwi, if it depreciates, it's only going to become less and less in real terms. Obviously, if Kiwi were to ever trade to, say, 60 cents or something like that, if you were all the way up here at 230 pound Kiwi, that would only give you, 60 cents? That would give you $3,600 pips, okay, from 6,000, 60 cents on the dollar. So this is what I see as a long-term Kiwi possibility, okay, for pound Kiwi, I should say. So you have a diagonal from here. That means you have overlapping waves, and each wave is actually a 3, okay? The final wave here is a 3. Make it something similar on the upside. Point being is diagonals are often fully retraced, okay? This is a weekly chart, so this isn't happening tomorrow. But an example I can give you of when this played out, you can actually see how this is Euro Aussie, for example. Euro Aussie actually did the same thing. You can see here, diagonal from 154.60 all the way back here. And you had a 1, 2, 3, 4, 5. That diagonal was fully retraced. Okay, in fact, it was more than fully retraced. So I think that we get something quite similar with Euro Kiwi. Okay, or sorry, pound Kiwi. This is Euro Kiwi. You can see we're riding the channel down. We just actually hit the bottom of the channel. We're turning up from it. So, all of this points to the possibility of the Kiwi dollar eventually just falling apart. Okay, that's what we're seeing with everything. When I look at these long-term Kiwi charts, when I look at the short-term chart, obviously, as far as the managing of risk and everything, where you might want to actually get into a position, that's something you've got to hone down on here. So the first support, let's call it 95.50. Okay, I obviously, as you know, am very heavy, of course, on slope analysis. So this slope here, okay, that's an upslope. You want to buy on the upslopes. I don't know if you're going to be able to get this again or not, given that we're already kind of rocketing off the lows. Let's see if we can this matches anything. A lot of this is, to be honest, is feel and play and everything else. So it's too early to tell. If this has any validity whatsoever, it's not something I can't really tell you at this point, because you want to see the market react and react and react to certain levels. This might be something to watch, though. If you take this former trend line, okay, which when it was broken on the downside, but you can see there's some validity to this slope. The market did bounce around here, and then it broke down. And if you extend that off this level, this level in the future could be a line that you want to buy, okay, especially if it intersects, say, with something like a former support. So moving forward with pound Kiwi, you might want to look at 93.65 to 94.35, as a level to potentially buy, a dip or something. There's multiple ways. Dale saying, is it too late to jump into dollar yen trade? I mean, yeah, Dale, I'm not looking to get into it at this exact second. Again, I think that the trade is on the upside, as I've been saying here for a while. I think, we talked about yesterday the penchant for dollar yen to have its big lows in the middle of the month. We've had October and December. We had lows on the 15th and 16th, and they were those huge drops, right? Those wide range bars. Well, we're going to get a wide range bar today. This is dollar yen. Rate of change today is 1.6%. You can see that's the 15th there. 16th December and then 15th of October there. Okay. But as we look at dollar yen, now we're just getting into the 24-hour moving average. Okay. Even if, even that drop here, this was December. Okay, right here, this is December. It's always great to look at, how a market trades from previous lows. And we'll look at crude here in a second. But, with dollar yen, look at what happened with dollar yen when it came off the low in December. Okay, it ripped and then it retraced a little more than 61% of the prior move. Okay. Let's say that we get up to 1750 or something here, okay, that would get us, or that's 1770. Let's say we trade up to 1750, that gets us a 61 of 1660. Let's say that we trade up to 1770, that gets us a 61 of 1670. So just looking ahead and knowing that resistance is up here, probably 1750 to 1760, I would be looking potentially to buy a pullback into 1670 or so. Obviously, we'll have more light on this as we get into the later trading hours. And there's crude up $3. There we go. So, boom. All right. So 6%. So it looks like natural gas was leading, if you will. Okay. And I'm glad that we were buying some oil futures. So where does crude go from here? Well, I don't think that we got resistance until the base of this triangle, 53. But next big move for crude is probably $60. By the way, this is the chart from earlier. Remember this? Counting the RSI bars. RSI above 70 for 15 consecutive weeks. That was at the top all the way back in 2000 during the oil bubble. Well, we're going to be below 30 for the 14th week this year, the 14th week in the current move. So we're probably going to match that with crude. But yeah, crude's going to go nuts on the upside here at some point. So if we look at crude and we say, well, how did we get long on this thing? So let's take a look at some of the shorter term stuff. All right. Might want to follow some of these. Follow that. Give you some, if you're looking at crude oil, it does look like 46.80 is potentially important as support. Obviously, 49.60 can very much envision the market taking this out up here and then getting slammed back down into the, support back near 47 or lower. Just look at former lows. I mean, here, okay, 46.80, 47.15. Always like to see what it would look like anyway, what a retracement would look like. And if we were to come and find some sort of a top up here again, the pullback halfway would be right at 46.94. So this, you kind of put this out as a level. to look to buy on these areas over here. Okay, so that might be something worth watching in crude. All right, well, it's been a fairly long webinar, but appreciate all of you now for taking the time to watch, and good questions and everything, and we're on a pretty good roll here. Let's, as Kevin said, let's stalk the heck out of Kiwi. I think, again, 76.80 is still going to hopefully provide some sort of a bounce, and eventually we'll be able to sell a little higher again. But going into tonight, I mean, look, I couldn't ask for any better, volatility here, right? So we'll be checking out potential buys here on dollar yen going into tonight during Asia. Again, keep in mind 1750, 1770 might get a pullback. Whatever you do, please don't chase. I know that every once in a while it might work out, but believe me, in the end, you're going to end up getting burned doing just that, so don't do it. All right, that's it. Everyone have a great rest of the week. All right, later.